Okay, we're live on Facebook. Mike Bucci, please take it away.
Hello, everybody. My name is Mike Bucci, and as some of you know, I'm the chairman of the Putnam County Business Council, and we have a real powerhouse of an event today for something that's pretty close to my heart. Today, we're going to be talking about the restaurant relief that's available, and one of the things that Putnam County Business Council focuses on is education, is advocacy, is getting information out there. And we have a really, really tremendous resource today in Thomas Morley from the SBDC, which I'll introduce in just a moment. I'd like to first say thank you so much to our partners, particularly Tompkins Mahopac Bank and to Titan for helping us to give us some of the economics behind being able to put together an event like this and bring in some of the resources to educate our members. But I'll tell you, one of the major things that we wanted to be able to do this year was help small business owners with what's out there, who can you partner with, what challenges are out there and how to overcome them, and then how to bring in these certain relationships to educate you and also to help you take the steps to get to where you want to be. And if you're watching today, there's a couple things you're going to get out of this particular event. The first thing is you're going to learn today what you need to do to get ready to apply for these funds that are available now. So you're going to learn everything you need to do in order to get your packets together, your information, etc. The second thing you're going to get out of today is you're going to be able to go through a little bit about what that application process looks like. So you've gathered your documents, you know what you need to do. Well, what's next? How do I take action? We're going to teach you, Tom is going to teach you today how to move forward and to actually take some steps so that you can get those funding. He has a tremendous amount of experience in this already, and I'm not going to speak for him. I'll let him speak a little bit about that. But what we want to do by the end of this event is put you in a position where you can sit at your computer with your ID, with all of your documents, right? And be able to scan everything and say, I can start and have some real confidence. So Thomas Morley, who is the director of the Rockland Regional Center of the New York State Small Business Development Center, is on with us today. Tom has a tremendous amount of experience. He's been a director there since its inception back in 1987. And Tom, I'm not so sure that everybody on Zoom and on Facebook right now knows what the SBDC is. Maybe they know what the SBA is, but maybe not the SBCC. So might be a good segue to, perhaps learn a little bit about the company you work for, what it is that you do, and you're a little bit about your background. So Tom, why don't you take it away?
Sure. Thank you. Appreciate it, Mike. The New York State Small Business Development Center is a government program. We're part of the State University of New York. We're supported in part by the Small Business Administration and by the state and by the localities that host us. We have 23 locations around New York State. Mine is the location that services Rockland, Westchester, and Putnam counties. And we're charged with providing specific management and technical assistance to individual businesses. And so I guess the essential distinction there is we don't look at an area and say, oh, we need downtown revitalization, or we need this, or we need that. We work with you and or your business. What does your business need? So everything we do is individualized and personalized. So with that, I'm going to share screen here. So give me just a second to get this going. And we'll get started. Okay, so we're going to be looking at the Restaurant Revitalization Fund. We're calling this still a preliminary overview because SBA has not released the actual application. They've released a draft of the application. So we're not 100% sure that that everything is going to continue to look like this. It'll be close, but it's not necessarily going to be exact. So there's $28.6 billion in the Restaurant Revitalization Grant Fund. Restaurants is pretty broadly defined. We'll get into that in just a minute. And eligible entities can seek a grant for pandemic-related revenue losses. Pay attention to that word, revenue losses. It's not your operating loss. It's not like, okay, we did $500,000 and it cost us $600,000 to do that. We lost $100,000. They're going to give us $100 grand. No, they're going to basically look at the difference in your sales between 2019 and 2020. There are some adjustments to that, so just keep that in mind. The adjustments include they will be reducing the grant amount by the total of any first draw and second draw paycheck protection loans that you've received. The government basically saying, well, we already gave you that money. We're not going to give it to you again. So do keep that in mind. Okay, so let's take a real quick look at who's eligible. Restaurants, like I say, is broadly defined. It's food stands, food trucks, food carts. You guys can read, so I'm not going to go through the entire thing. But the defining principal activity has to be the service of food and drink to the public. That's going to make a little bit of a difference in some places, because if you're a dinner theater or a comedy club or some such thing where more than a certain percentage of your revenue is from ticket sales, you're not going to be eligible. The same sort of things going to apply for like wineries, cideries, other licensed alcohol facilities or producers. Now, that said, bars are eligible, just not producers of alcohol. Bakeries or other specialty food retailers. So if you've got a bakery that hosts a little coffee shop breakfast function, if that service of food for on-site consumption, and to-go counts as on-site consumption, so we don't get too strange with that, you have to have at least 33% of your revenue. That's the number we're looking at right now. That's probably subject to some change from SBA, but they did confirm that this past weekend. It's got to be at least 33% of your revenue has to be for on-site food consumption for you to be eligible for this program. Franchises are eligible for the program if they meet all the other requirements. Now, all the other requirements, size, sales volume, et cetera, et cetera. It's way easier if your franchise is already listed on the SBA directory of franchises. That's easy enough to find. Just call your local SBDC. They can help you find what your SBA franchise number is. If you're not on the franchise registry with the SBA, you're going to have to provide a copy, or at least have a copy available, of your franchise agreement and the franchise disclosure document. So that, keep that in mind. This industry has been very heavily hit by the pandemic. Some folks may have filed bankruptcy. If you're in bankruptcy, it may or may not prevent you from applying for the program. If you're operating on an existing approved plan of reorganization under Chapter 11, 12, or 13, and you meet the other requirements, you're probably going to be eligible to apply for this. Now, you'll have to treat this money in accordance with the bankruptcy plan that you're operating on, but it's a resource that's still going to be helpful. If you're in Chapter 7 liquidation, you're not eligible. If you filed a Chapter 7 or a Chapter 13 but have not yet gotten an approved plan, you're not going to be eligible. I'll caution folks just in general, SBA tends to be a very black and white agency. If you filed on Monday and your plan has not been approved yet, you're not eligible. And there's no wiggle room and things like that. You can't say, well, I think they're going to approve it by Thursday. No, wait till after Thursday and you've got a plan, then you could potentially be eligible. Businesses that have permanently closed are not eligible. Even though this is a look-back program, it looks back at the difference in your sales between the 2 years. If you've closed, you're not eligible. It's not like they're going to replace the fact that you lost this previously. If you've closed, sorry, you're not in the game anymore. You're not eligible. There are also priority groups, and the way SBA is handling priority groups is not economically, it's based on time. The first 21 to 28 days of the program, SBA will be prioritizing applications excuse me, from groups that are at least 51% owned by one or more persons who are women, socially or economically disadvantaged, who also have daily control and management of the business. SBA is being very reasonable with this. It's a self-certification. But let me put it this way, they will be auditing these things. So if you make a claim, make sure you can back it up. A restaurant with 5 owners that has 2 women and 1 veteran would be considered a priority group, even though it's not the same priority group, since that would be 60% ownership with those 3 individuals from the priority groups. In other programs, you would not be eligible to say we're this or this or this. what SBA is saying here is, okay, if that's what you've got, then you're going to be eligible because they will take it in aggregate. So that's a good thing. So who's not eligible? State and local government owned or operated. You say, well, the government doesn't own restaurants. Yes, they do. In a number of locations. So they're not eligible. Operators of more than 20 locations. So if you've been particularly successful and you've got 20 locations of your restaurant or your pizzeria or some such, even if you're operating under different names and in different industries, you're not going to be eligible. We mentioned if you're permanently closed, nonprofits are not eligible in this program. They've been eligible in other SBA programs, but they're not eligible in this program. If you're not eligible for a minimum amount, which we believe is going to be about $1,000. So yes, if you're a particularly small location and it works out between the deductions for paycheck protection and everything else, you're going to get $812. They won't process the application. They're basically saying, it's not worth the time and effort to do that. You might say, hey, $800 is $800 to me. When they're looking at millions of applications that they have to process, they do need to make some hard decisions. If for some reason you are on the Treasury's do not pay list, you will not receive the funding. The Treasury's do not pay list is set up for folks that have defaulted on obligations to the federal government. So if there is a tax claim against you that you have not paid and are not on a payment plan for, you're probably on the do not pay list, in which case you're not going to receive that. If, for example, you did not receive a stimulus check because Treasury said you're not getting it because you're on do not pay, then you're not going to get this either. If you are on the Office of Foreign Assets Control sanctions, some folks may go, well, how could that be? Well, it's actually pretty easy. If you've got an owner that is in one of the sanction groups, that's a possibility. If you're on the death records list. Now, the only reason we even mention that is because there's a number of errors that have gone on. So if you have run into that in the past, where you've done other government things and they say, we can't give you this because as far as we know, you're dead. And you said, I'm standing right here, so obviously I'm not dead. And there's confusion with a name, similar birthday or some such thing. If you've encountered that before, be prepared to encounter this again, because everything that they're doing is going to be checked against all those lists. If you've already applied for a shuttered venue operators grant application, you cannot apply for this program. This is a one or the other program. If you're publicly traded or you participate in public equities markets, so if you raise money via public bonds, you're not eligible for this program. Essentially what they're saying in this program is we want this to go to the smallest businesses among this community. Okay, some of the definitions in the program are really specific. We talked a little bit about majority ownership. They are targeting underserved populations, socially and economically disadvantaged businesses. Excuse me. That's a processing priority. It's not like Group A is going to get this and Group B isn't going to get something. No, they're going to process Group A first, then they're going to process Group B. That's the only real difference, and that's only for the first 21 or 28 days. We don't know for sure which one it's going to be just yet. There are some set asides by size that they want the smallest of restaurants to receive support, so that's going to happen first. The affiliation rules can be very important here. Affiliation is invoked when anybody owns more than 20% of something. So if I own 20% of 3 different restaurants, those 3 restaurants, even though they're 80% owned by other people, those restaurants are now considered affiliated because of my ownership. So if you are subject to affiliation, get some professional guidance on that, because it's a very complicated area that may or may not impact the application at this point in time. Majority ownership is defined, and this goes to like our documentations and certifications, where you are saying, okay, we're owned by, we've got 3 owners and 2 of them are women. Okay, good. Do your tax returns show that? Do you have K1s that are reporting ownership percentages in prior years that match this? The magic number is it has to be more than 50%. 50.0% doesn't count. 50.1% counts. It's a very black and white decision for SBA. And again, this is something that, you can't say, well, it's my wife and I'm going to change this and say she owns 60%. No. What did you file on your taxes last year? If you did a K1 that said you own 50 and she owns 50, sorry, kids, it's 50-50. It's going to be a very black and white decision sort of thing. Principal business activity. There are very specific definitions within SBA for principal business activity. And what they're looking for is based on where your revenue comes from. So if you have a cafe that also sells coffee, and you sell coffee in bags and whatever, for home use and consumption, they're going to want to know how much of your business was from packaged product sales versus how much was from consumption sales. That defines your principal business activity. It's going to be very important. In terms of the certifications, sorry, I skipped one thing there. The certifications are going to be done as self-certifications in good faith. Keep in mind that at the end of the application, you're going to sign a statement that says everything you've said is true and correct to the best of your knowledge. These things, even though they're grants and you don't have to pay them back, they will be audited. And there are audit requirements around this. And there's record-keeping requirements around this. They can come in 2 years or 3 years and say, okay, we gave you this money 3 years ago. What did you do with it? And you have to show what you did with it. And they're going to come in and say, okay, well, you told us, Tom, you said you had a restaurant and you said you were African-American. And they'll be like, you look a little Irish to us. Was that an accurate certification? And I'd have to say, no, it's not. At which point I'm going to have to give back that money because I lied on the application, not because I wouldn't have gotten it necessarily just if I said I was Irish in the first place, but because I lied on the application. And keep in mind, the government, as you hear ads on television all the time, is the largest collection agency in the world. They're going to come and get you. To clarify a little bit on socially disadvantaged individuals, those are individuals who have been subjected to racial or ethnic prejudice or cultural bias within American society because of their identities as members of groups without regard to their individual qualities, and social disadvantage must stem from circumstances beyond their control. The following groups are deemed to be socially disadvantaged: Black, Hispanic, Native Americans, Asian Pacific Americans, and subcontinent Asian Americans. Those are the main groups that the government tracks and looks at. Individuals that are not in one of the listed designated groups may establish social disadvantage based on personal experience of substantial and chronic social disadvantage in American society, not in other countries, which is the result of a distinguishing feature, i.e. race, ethnic origin, gender, physical disability that has contributed to the social disadvantage. I don't want to get all sociological on everybody this morning, but you've got to be able to document what happened. Keeping in mind, of course, that we're looking at either 21 or 28 days delay in processing for priority versus non-priority. So, not the kind of thing you want to lose too much sleep over. Okay, the application itself has not been released yet. That's sort of true, sort of not true. SBA actually did release a draft of the application. I would not expect substantial changes to that, but I would expect, some minor changes to it. So like a good meal, preparation is important. Get all your documents together. We don't know yet, specifically with the portal, if you can, get through 2/3 of it and say, oh, wait a minute, I need this piece of paper. Can I save where I am? I'm sure there'll be some opportunity to pause or save the application at some stage. But you want to have all your stuff together. Even though we don't know all of the questions yet, do keep in mind, this is the government. We like to kill trees, although we're killing digital trees nowadays. They're going to ask you a lot of questions. You're going to say, well, what the hell does that have to do with what's going on? They're going to ask you your number of employees. What does that have to do with what your sales were? Well, because they want to have as complete a picture of your business as possible. They kind of look at this as an underwriting process, even though it's not a loan. So keep that in mind. Make sure you have the value of your PPP loans. Not, I got about 30 grand. No, I got $31,219.18 because they're subtracting that. So you don't want to estimate, certainly don't want to estimate on the high side. They know what it was. Everything that is going to happen here is going to track on EINs and social security numbers and things like that. Everything's going to be cross-referenced 9 ways to Sunday. So they're going to know what the real number is. Now, if you put a typo in it, no one's going to get stupid. But be accurate, because this also, I should preface a lot of this stuff by saying, this is a one bite at the apple program. If you apply and are rejected, there is no appeals process. There's some discussion now of an error correction process where you can say, hey, obviously I typed this wrong. Oh, I loaded the wrong year's form. Oh, I did this incorrectly, where you can sort of demonstrate that it was an error, but there is no appeals process on this like there was with EIDL. Just keep that in mind, that you got to be accurate with this stuff. You're going to need your corporate documents. When was your corporation formed? If it's a corporation, if you're sole proprietorship, that's fine. Did you register your proprietorship? Have you filed your taxes as a sole proprietor? Everything's got to be consistent across the application, and you're going to need those documents. They're going to ask you, when did you start your business? And it's not like you can say, I think it was like 1980. No, it was February 7th, 1980. That's what you need to know. So make sure you've got that stuff available. Have all of your financials and last 2 years of tax returns available. Even though the app isn't out yet, like we're saying, it's the government. There's going to be lots of questions. You have to have identification information. They're going to want a license, driver's license, front and back, passport. Something that's got your picture and your name, such that they can say, yep, this is really Tom that we're dealing with, because if Tom screwed up on the application and lied to us, that's the guy we're going after. So don't think if you don't give them a driver's license that they're like going to give you the money and then worry about getting licensed. No license, no money.
Hey, Tom.
Yep.
Mike Bucci, I got a quick one on you.
Sure.
That fifth bullet, have your financials and 2 last years of tax returns available.
Mhm.
Financials means a lot of things to a lot of people, just because people have invested great time with being here so far. What do you mean? You mean like bank statements? Do you mean credit card statements? People use their corporate card on American Express. Give me a couple of examples of what's needed, what's not needed. Do they need insurance bills?
No, for financials, what they're going to need is your basic, essentially a basic P&L. We're not sure about a balance sheet, but I would have a basic set of statements, a P&L and a balance sheet. You have to be able to document your sales. This program is based on a difference in sales. And you've got to have an accurate number for that. We do get to this on a little bit of a later slide, but I'll get to it now. Restaurants have a bit of a reputation as not being the most accurate reporters of sales volume. You can say in your mind, my restaurant does $500,000 a year. If your tax return says 400,000, that's the number that they're going to go with on this, and that you have to go with. If you say one number and your tax return says a different number, you've committed a fraud against the government. So you're going to have a basic P&L, basic balance sheet, and you will have to, a person that has financial responsibility in the firm has to sign those statements. If you've already filed your taxes for both years, that's fine. You can use your tax returns. Those will be your financial statements, and that's fine. And those are signed and they're filed, and they're going to get your 4506T as part of the application. They're going to go confirm the numbers with the IRS. That's fine for financial documentation. If you haven't filed your taxes for 2020, you're going to need a report from, if you're using QuickBooks or some other financial software, you can use that. SBA has been making reference in this application to what they're calling an ecosystem for it. You may be able to give them access to Clover or Square or other similar point of sale system that you're using, and let them go read your system directly. Now, people might say, well, I'm not going to let them read my system. Well, think of it kind of like TurboTax and downloading your W-2 or a statement from your broker or some such thing. It's a digital world. Kind of get used to it. But yes, you're going to need essentially a P&L and a balance sheet, and you're going to have to sign that and say it's accurate. If it's not, you're going to have an issue. Okay, so here's our basic documentation. This is straight from the guidance we just got. SBA Form 3172, if you want to Google that, it will come up with a draft, and it's got a big watermark that's a sample on it, but you can look at exactly the sequence that they're asking the questions in. You need some documentation to prove the revenue that you're claiming in your application. You can do that by verifying the tax information using a 4506T. That will meet the requirement for this program. So if you filed your 2020 taxes and your 2019 taxes, you can use the 4506T, use the tax information. That's going to be considered acceptable. In terms of gross receipts, the following documents demonstrating gross receipts and, if applicable, eligible expenses. Now, I'm not sure why they said if applicable, eligible expenses. This isn't based on profit and loss. It's based on revenue, but they're going to ask for some expense information. So your business tax returns, your 1120s, 1120S, if you're doing, depending how you're doing, 1040 Schedule C, Schedule F, 1065s, K1s. Now, they do mention bank statements. For a lot of folks, bank statements might be multiple pages every month. Times 24 months is going to be a lot of stuff to scan and upload. So I would look to do something else in terms of proving my sales. And be prepared to prove the source of your income if on-site restaurant sales are not 100% of your revenue. So for example, if you sell other products at retail in that location, you're expected to have an accurate accounting report that says, okay, I sold this for my on-site food, I sold this for my on-site retail, I sold this for gasoline, I sold this for convenience store stuff, I sold this for lottery tickets, whatever. Be prepared to prove where it comes from. If on-site sales of food and beverage to the public are not at least 33%, you're not going to be eligible. Now, food and beverage sales to the public. Bottled soda in a convenience store does not count as beverage sales to the public. A convenience store is not a restaurant. A Subway location in a gas station is a restaurant. A Dunkin' Donuts location in a gas station is a restaurant. Depending on how that particular operation is structured, if that's a separate operation that's paying a fee to the gas station to be there, that Dunkin' Donuts or Subway or whatever would be eligible. If it's all owned by the same individual in the same corporation, you're going to have to break down what percentage of sales comes from each of those locations. If you've got questions on that, feel free to reach out to your local SBDC and we'll help you with that. If you sell alcohol, depending on how you sell it, whether or not you produce it, et cetera, you will probably need copies of your TTB 5130.9, which is sometimes referred to as your Tax and Trade Bureau filing. That's generally for people that produce things with alcohol. So if you're a microbrewery and you've got a restaurant associated with it, your beer sales would be reported on your TTB filing versus your restaurant sales, even though the restaurant might be selling beer for consumption on site because you have a premises consumption license as part of your production license. So again, those are kind of special circumstances. If you've got that sort of situation, give a yell. We'll be happy to help you get that sorted out, or just get the advice of your accountant, attorney, et cetera, et cetera. You're going to call the chamber. They'll be happy to help with that as well, I'm sure. Okay. All right, so yeah, we talked about some of this already. This will be done online only. There are no paper applications for this. So if you're a brew pub, tasting room, tap room, brewery, winery, distillery, or bakery, you've got to prove, again, this 33% number is important. You're going to have your TTB paperwork. If you're a hotel with a restaurant, again, it depends on how you're structured. If the operator and if the owner and operator of the hotel also owns and operates the restaurant, then the restaurant has to be at least 33% of gross receipts or you're not eligible. Given the way travel was also hit as an industry, that might not be an issue for some hotels or inns where the restaurant was the only thing that was still doing some business. So, again, that's what you got to look at. And be prepared to prove that source of income, that you've got these kind of reports from your accounting system, et cetera, et cetera. I can't stress enough the need to be accurate on these numbers. SBA is a business-focused entity. They're focused on lending money, not giving it away. So this is fundamentally an anathema to SBA to just be giving money away. So they're applying all their SBA history and experience and culture and DNA to this and saying, okay, well, we have to underwrite these things. We have to make sure the information is accurate. Well, they will. I mean, SBA has hired like 2,000 people in the last month. They got to do something. They're all going to look at screens and say, hey, Tom said this. Is it true? Well, we'll find out. Okay, other things to think about. The federal allocation for this program is $28.6 billion. Your grant's going to be based on your lost revenue and the date when you started. If you were not in business in 19 and 20, there's still assistance available. Call us, we'll explain how that's going to work. There are some formulas for special averages, and we do look at expenses in those programs. So, but they're kind of special. So the application is going to do the math for you. It's going to calculate the lost revenue between 19 and 20. Gross receipts does not include amounts that you received from Paycheck Protection, even though under the technical rules of accounting, your forgiven debt is revenue. No, in this case, Paycheck Protection forgiveness is not revenue for this program or for your taxes. Any amounts that you receive from EIDL, economic injury disaster loans, advances on EIDL, targeted EIDL advances are not counted toward your gross receipts. Also, state and local grants are not considered gross receipts. So I know Westchester, for example, has had a program. I'm not sure about Putnam. They're having county-based and state-based programs to support restaurants. Those amounts do not count as gross revenue. The section 1112 thing is basically deferred payments. I'm sorry, Mike, go ahead.
Tom, may I jump in for a moment?
Sure.
Tom, when I was just doing my taxes recently with my accountant, and he told me, Mike, we don't have to claim the income, but you have to claim if you got any type of support with, any type of relief, any type of government payout last year, and type of support. So it doesn't count in terms of revenues, but do you have to, I didn't hear this, but do you still have to disclose all of these amounts that were received? I missed that part. Sorry, say it again.
No, you neither report them, you don't have to report them, and you don't have to count them.
Okay, thank you.
For the purposes of this program.
Thank you.
And I should point out just a quick little segue. If you did receive Paycheck Protection money, hopefully your accountants or you got the word that the legislation signed in December changed the original opinion of the IRS on the tax treatment for this. Not only do you not show a forgiven Paycheck Protection loan as revenue, you do show the expenses that you paid with it. It's a double goodie because I'm not showing the revenue and I still claim the expenses.
That's great. Right.
So why is that good? Well, it's good because, it just means I lost more money. Well, yeah, but in the United States tax system, losing money this year, if it's more than you made, well, then you get to do a tax loss carry forward. So talk to your accountant, but it makes a big difference. Okay. If we look at this and say, okay, just restaurants and bars and stuff like that, we've got 955,000 applicants in the United States. If we look at the entire group, it's almost 2 million entities that are eligible to apply. If we just go with the 955,000, that only equates to $29,919 each. Obviously, not everybody's going to apply. Not everybody's going to be eligible. Not everybody's going to be successful, but the early and prepared birds will get the best worms. It's a finite program for SBA. There's only so much money in it. When the money runs out, the money runs out. There's a maximum of $5 million per location for a maximum of $10 million for any set of affiliated businesses. We're going to skip some other details in there and get to the next slide, which is a complicated one. Now, I did mention to Mike earlier, we will be sending all these slides to the Business Council, and they can get a copy of the slides out to you so you'll have the information directly. So don't worry about taking notes and stuff. But here's the interaction between programs with SBA. The only one I think that most people really need to be worried about. In all cases, you can't use dissimilar support money for the same expense. So if you got a Paycheck Protection loan and it paid Mike's salary for the month of April, you can't get other money and say, well, we paid Mike's salary in April. No, you can't use two different pots of money for the same expense. The other one that is very significant is Shuttered Venue Operators Grant. You can apply for an SVOG. Originally, if you got a Paycheck Protection, you couldn't apply for an SVOG. They changed that, but there's still restrictions on that. This is a one or the other program. You either go SVOG or you go restaurant revitalization. You can model which program works better for your business. You don't have to take the one that's cheapest for the government. You take the one that's best for your business, but you cannot have both. So if you're a dinner theater and you're thinking SVOG makes more sense, go SVOG. Model the numbers and see what's going to make the most sense for you. But you cannot have both. That's probably the biggest single thing on this little chart, is that you can't go SVOG and RRF. Also, you cannot apply for Restaurant Revitalization Fund more than once. If you applied this week and were rejected next week, I feel badly for you, but that's it. It's a one bite at the application program. There's a lot of programs with SBA that are one bite at the apple, where you apply, you get it, and that's it. But like with EIDL, if you applied and were rejected, you could file an appeal, or you could apply again for whatever reason. If your appeals period had expired, you can apply again. This program, you can't do that. So please be prepared when you do it. What can you use the money for? This is the really cool thing with this program, because it's very unlike SBA. And one of the big things that's unlike the government the government does not like us to ever pay for alcohol. Like we can't, when we're using government money for an SBA event or an SBDC event, we can't pay for wine at dinner because it's government money. You can't pay for liquor. In this case, yes, you can use this for business supplies, food and beverage expense. You can use it for payroll. It's essentially most ordinary operating expenses in the restaurant industry can be paid. You can pay existing debt, utilities, maintenance, personal protection stuff, insurance charges, telephone charges, credit card charges, all those sort of things. You cannot buy real estate. You cannot make investments. You cannot make loans. And you certainly cannot make political contributions or pay for advocacy, lobbying, or any other expense that's disallowed by SBA, which is the polite way of saying, if we don't like what you did with it, we're going to complain. They're not going to get silly with that, but it's one of those things you don't want to be silly with it. You can build outdoor space. You can do construction with that. They're looking at this as trying to get the industry back to shape. They're not looking at this as, well, let's boost this industry up and let people build new restaurants. No, this is like, you got screwed. We want to get you unscrewed. But you can build outdoor space. You can't go build a new restaurant with it, but you could build outdoor space on your existing restaurant. You cannot make you cannot make payments on loans originated after February 15th of 2020. That's significant only insofar as how you book the money internally in your organization, in your accounting system. It shouldn't be very hard to say, no, I use this money for that. I use my money for that. As long as you've got money coming in. So you could say, yes, I had money coming in that was available to pay for those things that you didn't want me to pay for. You will be required to maintain documentation demonstrating your compliance with the eligibility and all other requirements of the program for 4 years following the receipt of the grant, and retain all other records for a minimum of 3 years. That's important. Reason being, at some point, they're likely to come in and say, hey, what did you do with this money? We gave you all this money. What did you do with it? If you receive more than $2 million, you're obviously a sophisticated operation and you've got sophisticated systems, you will be audited if it's over $2 million. If it's between $1 and $2 million, you got like better than 50% chance of being audited. If we get down to under 250, 150,000, under numbers like that, the percentages obviously go down because there's so many more of those, they can't audit all of them. Some will be what's called a desk audit. They'll mail you a questionnaire that you have to answer and be able to prove. But please, please, please be very careful with all your numbers and everything else on this. There's no fudge in this. Okay, SBA affiliate rules are complex. If you think you're subject to affiliation, get advice from somebody. Talk to your attorney, talk to your accountant, talk to the chamber, talk to an SBDC. Because the SBA affiliate rules apply to maximums, limits, and even the number of applications that can be submitted. If it's determined after the fact that you submitted, there's a max of 5 on this program, 5 applications from affiliated entities, there's a max of. If they determine you submitted 6 or 7 applications and those other 2 applications were funded, you're going to have to give the money back. And they will treat this the same way they treat a tax obligation. It's money you owe to the government. They will hound you until you're dead to get this money. and you won't get tax refunds. You won't get a lot of other stuff in the interim. So please be very careful with those things. That's a link to the where you can get the affiliation rules. They are actually very long and very complex. On a simple sense, if you own 2 pizzerias, they're affiliated. If you own 2 of your own pizzerias and you own 20% of Mike's Pizzeria, now all 3 of those are affiliated. If you've got 2 of your own, 1 of Mike's and 2 of mine, well, you're at 5 now. Those 5 pizzerias now have maxed out what any of those entities can apply for. So it might seem, oh, that doesn't really apply to us. Yes, it does in a lot of cases when you think how many people own different things and whatever. Now, the fact you might have like 4 family members that own your pizzeria, that's a different thing. Unless some of your family members also own other stuff, then it's going to go to an issue of control. But again, like I say, the rules are complex. If you think you're going to be subject to it, get some professional help. And with that, that's the end of me putting you guys to sleep. And we will now be happy to take any sort of questions and try to answer. And I know we've been kind of pessimistic about parts of this. I don't intend to be pessimistic. It's a lot of money. It is money that is going to make a huge difference in most communities. The government is recognizing that dining, restaurants in particular, are a huge component, not just economically, but of the social and cultural life of a community. And the intent here, and it's why they based it on revenue, not even losses. This is to replace lost revenue.
Right.
So, I mean, it's real money that can make a real difference. Get online for it, get ready, and get some help to get ready.
Tom, thank you very much. It's Mike. We have one question coming in. We answered one, which was, where do we apply? You certainly covered a little bit of that. But there's a second question, which is, and again, everyone's going to get this deck, so a lot of the pieces that you may have a question will be answered with that. But a good question is, can you use the money to pay off existing SBA loans borrowed in 2020 for the restaurant? You may have gone over that, but I don't remember the exact answer. And we got another one coming in. So that's a good question.
It depends on when the loan was made, and sort of no, because you can't prepay loans with it. It's a question that has to also go to an accountant, and here's why. If I get $50,000 from SBA on a grant for this, and I had a good month, things are picking up, and I made $50,000 in my restaurant this month, and I pay off my $25,000 SBA loan, which $50,000 did I use? Now, I'm not trying to be silly with stuff and like, which set of books do you want to see kind of thing, but it's important that if you say, no, I used my money to pay off that loan, you be able to prove that you had the money to do it. Now, one of the things that some accountants will recommend for some businesses is keep that money in a separate account, keep the RRF money in a separate account, and pay certain things from there and pay other things from your normal operating accounts. You can do it if you're looking at it in your mind that, okay, I've got this money here and I've got this money here. Does it make much difference which pot of money you use to pay something? Well, to SBA, it does. To you, it doesn't. And it's kind of like reconciling the difference between a cash accounting system and an accrual accounting system. What your mind says and what your mind thinks versus what your checkbook says are 2 different things. So if you can validly show that you have the resources to make the payment that you did using non-grant money, then yes, you could do it. Technically, you're not supposed to. Oh, and in terms of where you apply, it's going to be like restaurantrevitalization.sba.gov. It'll be an address like that. That's not the address, but it'll be an address like that at some point when the portal is ready to open.
And folks, to Tom's point, when that link becomes live, we will certainly stay in touch with them, and we will send that out via email, our email list. It'll be on our website. It'll be on our Facebook. So just stay close to us and you'll get that information. Tom, we have another question, which is, where did you get such a stylish vest? I'm just joking. That is a nice vest, but that didn't actually come in. A good question we just got in is, give me a second. This is a good one. Can owning 2 businesses, one of which is a restaurant, the other one's a real estate company, can that affect the ability for the restaurant to get the relief funds?
No.
Okay.
But disclosure may be required
Right.
because they are considered affiliated businesses. And depending on what sort of support may have gone to the real estate business versus the restaurant, and yeah, it's the fact that they're not in the same industry, they're still affiliated, but the affiliation implication is different than if it was two restaurants. If it was two restaurants, then affiliation rules not only kick in for disclosure, but they kick in for maximum amounts.
Right.
Because all the affiliated businesses cannot exceed the amount available to any one business. So if the maximum in a program is $5 million and you've got three businesses, if those three businesses total up to $400,000, you'd qualify. If they total up to $600,000, you'd only get the first 500.
Tom, so that begs the question, because if we, I don't want to go down too deep of a wormhole here, but if I have a really successful construction business and my restaurant business is suffering, what you're saying is that if there's no correlation between the two, meaning no support, they're independently owned companies, but I happen to own both of them.
Right.
Is there am I hurt by that from a restaurant perspective for my opportunity to get funding? I just want to be clearer on that question.
No, you'd have to disclose that there are affiliated businesses, but it would not affect your ability to apply in the Restaurant Revitalization Grant Fund. The restaurant, as long as it operates, it's got its own EIN, it's got its own tax returns, its own corporation. You have to disclose the affiliation, but since the construction company is not participating in restaurant revitalization, there's no economic impact on the application.
Tom,
And the vest was probably Macy's, and I am known for wearing vests like 90% of the year.
you know, there's this guy I work with, and he wears something he calls a swacket, which is a sweater, but it's a jacket. He calls it a swacket. I can't get that word out of my head now, so I just had to say that live. Tom, we've spent a great deal of time with each other today. This has been incredibly helpful. Before we go, if there was just one piece of advice, if you could just boil all this down into one nugget, if you could, what would be that one thing that the viewers today should walk away with?
It is a unique government program that is giving just a huge amount of support to the restaurant industry. And at the end of the day, if you do not go through the application and at least do the math and determine what they would send to you, that's being foolish.
Okay.
If you want to take an ethical position and say, well, hey, my to-go business tripled and I didn't really have a bad year. Well, okay, you're not going to be eligible anyway because your 2020 sales, when subtracted from your 19 sales, aren't going to show a loss. I hate entitlement kind of things where people say, well, I can get it, therefore I should. No. But the restaurant industry has been just absolutely hammered by this pandemic. Between the closures, between just many restaurants, with all deference to restaurant owners and operators, I unfortunately do have some experience in restaurants and food service. It's a tough business to begin with. This is a lifeline. Take it.
Okay. Tom, this has been great. I learned a ton. I hope our viewers did too. This is going to be recorded. I'm sorry, it's going to be shared on our Facebook page as well as our website. And if any folks want to get in touch with Tom, his information will certainly be available on our website in the post, particularly his email from SUNY Rockland. So Tom, with that, I want to say thank you for your time. I want to say thank you for everyone who's been here today, and wish you all the best of luck. But we're here for you. Tom is here for you. The SBDC is here. All these organizations are here for you. You just have to reach out and ask alongside with your CPA, put together a good team. Don't go at it alone. You got a lot of people out there that are looking to make you successful. One last thing, Tom brought a lot of points up about how this could go wrong if you lie or if you stretch the truth a little too much, right? He's making it very clear the money's there. You don't have to lie. You could just say, this is what happened. This is what we need to do. This is what we need to accomplish. And if you're suffering, the help's there. So best of luck to all of you folks. And thank you so much for spending time today. Have a great day. And thank you, Tom.